For the last few years, AMD has been Wall Street's favorite underdog story, a company that crawled back from the edge of bankruptcy to challenge the absolute biggest names in tech, riding a massive wave of AI optimism. Record revenue and the AI boom have dominated the headlines. However, the internal financial filings of the company's own leadership team show a consistent, multi-year pattern of divestment. This chart compares standard tech industry insider ownership against AMD. For a company of this scale, you expect the leadership team to hold a significant stake. At AMD, the insiders own exactly 0.06% of the company, and they are aggressively reducing even that tiny fraction. CEO Lisa Su sold $26.9 million worth of her own stock in a single month. That followed another $36 million sell-off just 16 weeks earlier. This isn't isolated to the top. The Chief Technology Officer and the Chief Financial Officer are following the same trajectory. Currently, the ratio of executive stock sales to purchases stands at 13:2. While executive compensation often involves selling shares, the scale and timing here are notable. As the stock reaches record highs, the collective leadership team is choosing to secure personal liquidity rather than increasing their exposure to the company's future performance. To understand this disconnect, you have to look at the physical constraints of the hardware. AMD designs processors, but they do not own the factories required to build them. Every advanced chip they sell relies on a single supplier, Taiwan Semiconductor Manufacturing Company. 100% of their cutting-edge production is outsourced to TSMC. This places AMD's entire production pipeline on the island of Taiwan, a location at the center of escalating global trade tensions. We are already seeing the consequences of this exposure. Recent United States export bans blocked AMD from selling its MI308 accelerators to Chinese buyers, forcing an $800 million inventory write-down and wiping out a projected $1.5 billion in revenue. AMD's growth is currently tethered to a single, geographically sensitive hub. They cannot control the geopolitical shifts that dictate the viability of their most critical manufacturing partner. As this diagram illustrates, AMD faces a hard mathematical limit on its ability to scale. TSMC's advanced node capacity is sold out through 2026. Diversifying to TSMC's new Arizona facilities carries a 20% cost penalty, directly reducing profit margins on every unit sold. Beyond the processors themselves, the AI hardware boom is consuming the global supply of high-bandwidth memory, or HBM. Because memory suppliers are prioritizing HBM for data centers, they are producing fewer standard consumer components. This creates a severe shortage of DDR5 and GDDR6 memory that powers AMD's traditional PC products. This resource competition is hitting the bottom line. Driven by these escalating memory costs, AMD's own CFO projected that revenue in their legacy gaming division will drop by over 20% in the second half of 2026. AMD is operating in a zero-sum logistical environment. The resources required to fuel their AI ambitions are actively reducing the profitability of the legacy business that provides their foundational revenue. While AMD manages these internal manufacturing limits, their two biggest historic rivals have formed a direct partnership to challenge their market share. In late 2025, NVIDIA announced a $5 billion investment into Intel to develop custom x86 processors. This partnership creates a pincer movement. By combining NVIDIA's graphics ecosystem with Intel's x86 architecture, they can attack AMD's dominance in the handheld console and laptop markets with superior hardware integration. In their own SEC filings, AMD labeled this partnership a material adverse risk. This context clarifies the executive sell-offs we saw earlier. Leadership is navigating a landscape of fixed manufacturing ceilings and a newly unified competition. The underdog narrative remains popular with the public, but the physical reality of the supply chain and the flight of insider capital suggest a company facing significant structural instability. This analysis is for educational purposes and does not constitute financial advice. The markets are volatile, and viewers must conduct their own independent research. Will AMD be able to engineer their way through these manufacturing bottlenecks, or is the pressure from this new NVIDIA-Intel alliance too significant to overcome? Let us know your thoughts in the comments and subscribe for more in-depth reports.